Hey, what's up, TenfoldFX? This is Kenneth, and I'm back with another video. This one will be titled The Blueprint. Okay, so basically, the blueprint is just what I'm looking for in order to take a trade, or when I'm back testing. How do I follow price action? How do I know where I am in structure, where I am to take a trade, or to wait for a setup to play out, and so forth. So these are the things that I literally look for and that I use on a day-to-day basis to find trades, to get into trades, to hold trades, and so forth. Okay, so what I want to do is let's go on to the first one. And the first point in the blueprint is you need to identify the overall trend on the higher time frames. Now, as simple as that may sound, we tend to get lost when it comes to the overall trend, because sometimes we'll zoom out this far and we'll see that the market's moving up, but then you think, no, man, it's still moving down over here, and you may get thrown off a bit to see, okay, there was a high and this looks like a lower high and so forth. But you must understand something. We are trading current price action, of which is this right here. This is our current price action. Okay, we can see that we were basically trending down. This is the 4H time frame. We were basically trading down and then went up. We are currently up right now. Okay, so the first one is to identify the overall time trend. And that obviously we can see on this 4-hour time frame. We are up. Structure is up. We may be rejecting at previous highs and stuff like that, but structure is up until it breaks. Okay, so the next point is identify the recent impulse legs on current structure. Okay, now before we go any further, I want to do this quickly. So what we're doing is we're identifying the most recent impulses, right? So if, for instance, we have an uptrend, I'm going to try not to draw it too perfect because we know the market is not perfect at all. Okay, let's just get some like this and so forth. Okay, that's our uptrend, a nice imperfect uptrend. And basically what that rule says is you just want to identify your impulse legs. And here's the reason why. So if I see this as my impulse, okay, the second step is to draw support and resistance at the high and the low of the impulse. Okay, so what I do is I fetch my horizontal line tool and I basically draw out my support and resistance at the high and low of that impulse. Now, what this is going to do is help me identify that everything in the middle or between these two lines is a pullback. Okay. Now, as we know that our pullbacks can result in price basically like creating a downtrend, of which we may see deeper retraces, sometimes ultimately breaking structure completely. Okay, so those deeper retraces can result in structure breaking overall. Okay, and that is why the best time to trade a retrace is when we have one of our rules being met, which is break past a low. Even though you are in a bullish structure, you are in an uptrend, once we have a break of a low within the retrace, okay, obviously those are the trades that you can take and look to take back into structure, but remember that you are overall long bias. Okay, okay, so you draw out your support and resistance levels and understand that everything in between is literally a pullback. Okay, now what you can do also is use your Fibonacci, okay, and just place it on the impulse. We know that our impulse leg should not have one candle pullbacks, okay? Like you cannot count one candle pulling back as a pullback. So for instance, this impulse, let's see. So for instance, something like this, we take this as one straight push to the upside because we don't count that as a pullback and we don't count that one as a pullback. So we're just counting that as one straight push, right? So when we look at our, sorry, let me just get this. Yeah. Okay, so when we look at our move to the upside, we'll then obviously see where price is finding support and whatever, and then we will follow the rules going forward. But every time we break out of a previous high, you have to draw your new impulse based on where it started to the end. And then simply what you do is you take your resistance level and you can plot it on the new resistance of the new impulse and the support for the new impulse leg. Okay, let's move on to the next one. So once you've identified that, okay, you just need to know what phase of the market are you in, because sometimes you may find that the move is busy playing out and you just need to know where you are in that move. So if the market has done this, but we haven't created a resistance as yet and showing price basically pushing away from that level or exhausting or respecting a previous level, whatever the case may be, okay, you can't draw out an impulse when price is not yet finished. So you have to wait for price to finish, show you some kind of a reaction, pull away from there, and so forth. If you are on the lower time frames, you understand that in this push, you literally have an uptrend on the lower time frames. Okay, so you're watching that uptrend play out, and literally when that uptrend breaks structure, you will know that it is now time for the pullback. Okay, and that is essentially it. So once you see like a break of structure or whatever on the lower time frames, you know that that push is now finished, right? And what we're going to do is identify the current market phase. Am I still in the push? Am I now entering the pullback? If you are entering the pullback and you find this rule being applied, break of a low, okay, create a new low, which means we are going lower. You can look to trade the pullback based on the H4 time frame. Obviously, the higher time frames, your pullbacks will be much steeper, meaning more perps and worth it overall. Okay. If you are doing like on the 30-minute and stuff like that, and if your impulse is not that big, then obviously you're not going to look into that. Now, before I go forward, I just want to make mention that your overall trend on the higher time frame, whichever higher time frame you choose, I understand that there are people that may be working or whatever the case may be. So you may use H1 as your higher time frame. You may use M30 as your higher time frame, you know, and then obviously just look at the smaller structures to get in on quick trades, bank a quick 10 to 50 pips, you know, and be out basically. So just so that we clear that up, let me move forward here. Okay, so every time you get a new impulse, you will move your support level and then your resistance level as well. Okay, and understand that everything that happens in between is your pullback. And once we break out, we now have the new impulse. Okay, but what you essentially want is to catch the impulse in the retrace. Okay, while it's retracing, you want to catch the impulse. Now, something like this, and we should be very familiar with structure at this point, but this is so that you do not get faked out. So if we look back at this impulse over here, let me take off this one. Okay, when we look at this impulse over here, you can see that you wouldn't get faked out thinking that that was a break of structure. Okay, it was simply price having to dip much lower to reach into an area. That could have been based on a previous area of resistance, finding that support, maybe not being able to reach there the first time, having to reject again to come back into that area of lower prices before price can push away. So this is not a break of structure. Why? Because your impulse hasn't been broken as yet. Your impulse, your higher low basically hasn't been broken yet. So structure is not broken. Okay. When we're dealing with the inside, that is literally just off of a support and resistance structure base, right? That is how we're going to be looking at it. So identify the market phase. Are you in a push? Are you in a pullback? So that you can know what you need to do. And if you are in a push phase, you are simply waiting for that for structure to basically confirm the pullback. And exactly what I said was, if this market is basically trending upwards on the lower time frames, you know, creating your higher highs and higher lows and so forth, what you want to see on the top here is some kind of rejection of the resistance, showing you that price is failing to push higher at that point in time, and then obviously a nice decent break below. If it doesn't break below in this fashion and continue going down, then obviously we will just see and count the pullback in this area. So you may get something that looks like this. As price reaches the high, we get our pullback, lower high, and then price just struggles to break that level. Okay, and continues going up like in this example over here. Okay, usually you'll find a lot of wicks in that area, and then you will wait for your confirms in order to take it up. Okay, and by confirms, I mean confirmations. Okay. So you're waiting on structure to confirm the pullback, right? And these are happening on the lower time frames. It's not going to happen on the higher time frames. It's happening on the lower time frames. Why? Because the lower time frames build the higher time frames. Your M30 break of structure is setting up for either a push or a pullback on H4. M15 is setting up for H1. 1 minute is setting up for 15 minutes. Okay, the next one, if you find yourself in the pullback phase, so if you find yourself in this pullback phase over here in this area where we're pulling back, then literally all you are waiting for is for your structure to shift and continue in your overall direction. So you know that you're up because you have an upward moving impulse. Okay, and what you're going to be doing is finding your structure breaks, however that may form. You may get one like this, and then a dip back in, and the continuation. But that's essentially what you are waiting for on the lower time frames. If this is H4, then on M30 or M15, you are waiting for a structure break to confirm the push to the upside. Sometimes you will get a double bottom or a missed double bottom with massive rejection into the lows. Wait for candle closes. If you're still not sure, wait for a candle in the direction you wish to take the trade, i.e. bullish or bearish, okay? So you wait to see a nice bullish candle with not a wick to the upside and not a long wick to the downside. So if you find a candle that basically looks like that, what that means is, yes, we have volume, we have bullish volume in the market right now, but there is a bit of indecision. The wick to the upside and the wick to the downside is still showing some indecision. So what do you have to do? You just have to wait it out. If you don't want to wait or you can't wait, then I suggest placing a pending order 2 to 3 pips above the wick of that candle, and then wait for price to basically come and trigger you into the trade and ride you out. We'll talk about the stops now. Okay, so that's what you do in the pullback. You go down to the lowest time frame, well, the most clearest lower time frame. So if M30 is not clear, go down to M15. If M15 is not clear, go down to M5. If M5 is not clear, go down to M1M. And what I mean by clear is outlining clear structure. Okay, so if on M30 you have you can see structure almost, but they're like all 1 minute one candle pullbacks and stuff like that, and a lot of wicks, go down a lower time frame. If it's still too crazy and you can't see anything, go down a lower time frame. If it's still too crazy and you can't see anything, then just go back up to like M30 or H1 and just wait for one bullish candle to basically show you something, and then get in on the open of the next candle. Okay, let's go. Next one, execute. Like I just said, when you're looking for your confirmations and stuff like that, you can either take it on the bullish engulfing that you will find at these areas. So if you see, excuse me, if you see the high has been broken and you find the pullback, but you're not sure where the pullback is going to end, because it can end even further down here into the lows, and you just don't want to risk it too early. You may have a wick extending far and then coming back. Then all you can do is just wait for the candle close and maybe trade a bullish engulfing, bullish variation, or the same way I just told you now with a buy stop. If it is a sell situation, the exact same will apply. You will literally just wait for the market to basically indicate a level. So let's say we had something like, wait, I'm too close here anyway. Zoom it out a bit. Okay, so if we were in a downtrend, let's say that was our impulse, and then we had our pullback. Okay, let's say at that pullback, what you're waiting for on the lower time frames is something like this, just to confirm that we are basically now pushing to the downside. Okay, so you'll have the res being respected, a low being broken, rejection of the highs. Once you get your bearish engulfing or whatever the case may be, you will then look to enter at that point. Okay, once the market basically breaks below that, you can look to enter the market. If that's with a pending order, you'll use a sell stop. If it's a straight up bearish engulfing, you will then enter on the close when you have solid confirmation that that is a good bearish engulfing. Okay, the ones with long wicks to the top, long wicks to the bottom is just still showing you indecision. So you should just be cautious and rather use a pending order to get triggered in with the momentum. Okay, next one, your take profit and stop loss. So your take profit and stop loss are always going to go above the wick. Okay, once your pullback has now been formed and you have momentum in the direction that you were following, which is i.e. either downtrend or uptrend, you'll place your stop there once that level has been established. Okay, and then obviously take the trade. If your setup is solely based off of, let's say, the H4 time frame, and you are targeting H4 targets, right? Understand that this will be more of a swing trade than an intraday trade, and you will have to place your stops above the high of that, whatever the impulse or whatever the case may be, because understand you are drawing your Fibonacci on the impulse. So if you find an entry here or something and you just want to take it to, let's say, a fib target, then you can place your stops, based on M30. Let's say you want to take the trade back into the 0%. You can just place your stops above where that lower high was formed, and you can basically take your trade down. If you want to hold it, it's up to you. But if you are shooting for much bigger targets based off of H4, let's say you want to see, you expect to see a drop like this, tons of confluence there, then you'd have to place your stop above the swing high over here. So that lower high, let's say this was a downtrend, lower high, you place your stop above that level and then target a nice 1:4, 1:3, whatever the case may be. But just understand it's going to be more of a swing trade. Your TPs, as we know, let's just go. Okay, so that's your stop loss below or whatever, if you're in a buy or a sell trade. The last biggest wick, right? So like I said, you'll put it above the wick area over there if once we establish the lower high point, and then there's usually wicks in those areas. So just the last wick or based off of structure. Okay, next one, your take profits into previous structure or fib-based take profits. Okay, so TP always we look to this area. You don't have to, but we look to this area as our first take profit. As we know, there's a lot of double tops, double bottoms. So we look into this area to take either portion of our profits off or all of our profits off, right? And then you can obviously use the -27, -61.8, -127 as your TP 1, 2, 3, or 3, 4, 5, whatever. Okay. And lastly, this is so important. You need to learn to walk away from the trade. Once you have your entry, stop loss is set, take profit is set, and you don't plan to trade any other pairs or whatever the case may be, you can legit just close your laptop, close your phone, and carry on with your day. If your setup is based off of the H4 time frame, come and check your trade after 4 hours. If it's based off of the H1, come and check your trade after 1 hour, and so forth. Okay, if you are trading more than one pair, pardon, you can monitor from time to time, but don't sit watching price. You can follow price once you do check on the lower time frames to see if your structures are still playing out fine. Move stops to break even or next lower high points, whatever the case may be, lock in those profits. But just don't sit and watch it, because any kind of pullback or retracement, whatever, is going to scare you out of the trade. You're going to end up not seeing the trade through, being impatient. So just let your trades play out. Make sure that your stop loss is a good space away from your entry to allow your trade to breathe, because understand it's not going to go in your direction straight off the bat. So you have to be rational with those expectations. So let's look at a few examples on the US 30. I just chose, like, you can literally backtest this stuff. The same way you apply this is the same way that you are going to backtest it. And we can obviously see over here, we had the strong push to the downside, a nice 3-candle pullback, an extension going past our previous lower low. So in essence, this over here was a break to the upside, okay? After we broke this, okay, because why? We broke below there as well. So when we came back, we didn't come back for a retrace, we just came and broke it straight out. Okay, so what that is telling you is that this right here, this move, this is my impulse. So I can draw my res and my support and understand that everything happening in between is literally a pullback. So we had 100%, sorry, all the way down to 0% retrace for a continuation to the upside. Now, you can keep that in the back of your mind or keep these levels there, but you can still follow structure for like the smaller movements happening within, you know, your pullback, because it's obviously structure that brought price down here, and it is structure that is taking price back up there. So I'm not going to go through everything, but you can see once this level was broken, we know that our pullback structure was complete, and now we are looking to chase the market back to the upside. With every push, as you can see over there, we had a push in this area as well. We had a push. We don't count this one candle. We don't count this one candle as a pullback. Okay, this is just for H4, but just know that every time you find an impulse, that is basically what you're doing. So you're drawing out your resistance and support, and you're basically following price action all the way down here on the lower time frames, taking advantage of either getting in on the pullbacks or waiting for structure to break and getting involved in the overall move. Okay, some downtrend examples the exact same way. That's why I chose this pair, because it shows both. You had the push to the downside. We don't, not really a pullback, so we can just count this as one push. There we had our pullback and the extension to the downside. So we know that this right here is our impulse. That's our impulse to the downside. We had a 100% pullback. Well, not exactly 100%, but you get the point based off of this area of resistance. Okay, so if we take that wick area and draw it across, that is basically an area where the market has found that level of resistance. And we then had the rollover from there. So if you are looking into this area over here, once you see price come back and you know that we broke structure over here, you'd know that you can anticipate a break of structure, or a break of structure on the lower time frames, or a break of this overall move for the continuation up. So if we drop down, I'm not sure how far back. Okay, it's not that bad. So if we drop down, let's say to the M30 over here, we can basically see the structure change in this area. So we had a push to the upside, pull back, push again. I'd say that is at least a push down, breaking below that level. Even though it looks more tested, I can see what's happening with price here. And guys, you will be able to make these kind of judgments the more you are on the charts. Okay. For now, I know you need those clear explanations as to this is a solid break, this is not a break, but you'll be able to make those judgments as you become better and as you backtest. Now we know that this right here, see, the thing is, these impulses and stuff like that, they appear on all time frames, just like our structure is on every single time frame. So I know now that this is my impulse for this structures, right? For this lower time frame structure. I hope I'm not confusing anybody. But anyway, that's the high, and let's just call that the low, okay? And then obviously we had our pullback, and I understand this is a pullback. So we came up into this area, let me zoom in a bit, into this area of resistance based off of this bullish candle over here. And then you can call that for a level of resistance being tested and so forth. Okay, price basically pulled back. This is more like consolidation. So we can take even this out and just put these two candles together. And then obviously you had the rollover breaking below, part of our pullback, extension again, pullback, extension. So this is our 30-minute time frame, but we understand that we have an impulse. Okay, we have an impulse based on this part of this entire pullback structure. We had an impulse here that broke below, but we know on H4 this is still up, but we're following our structures within this pullback. So in order for this pullback based on H4 to continue going down, we be doing this breaking structures, trending down, breaking structures, trending up, breaking structure, trending down, breaking structure, trending up, until we break structure of this downward move in our pullback on H4 to now create some upward momentum for the continuation of our overall bullish bias based off of this impulse. I hope that was a mouthful. I really hope I didn't lose anybody there. But as we can see, structure had to break there. We had to trend coming down here. Structure had to break there. We had to trend a bit going up there. Structure had to break there. And I'm talking about the lower time frames. And then we had to trend to come down. And as you can see, based on our overall impulse, we had to respect that level, because if we went past it, that would essentially mean that it is a break of our overall H4 structure. Okay, so if we look at current price action right now, we know that this was our impulse on the H4. Okay, let's just go back here quickly. So we know that this is our impulse. We had a push to the upside and obviously the pullback, and we expect price to push up even further, okay, based on how our structures are looking over there, okay, higher highs, higher lows. So if we go down to the M30, I know that this is my push. I'm watching the market. I see there, whoop, break of structure, lower high, continuation down, lower high, faff around and miss double top, break below, lower low, lower high, lower low, lower high, higher low, rejection of the previous low. So a missed double bottom over there. Should break above, come back to test the lows, lower high, not breaking lows, extension back up, and now another pullback for a continuation to the upside. Now, this is actually something that I've been watching like now, and I was waiting for this to happen, is have a break of this, because I know this is my impulse for this 30-minute structure going up. I know that's my impulse, and I'm waiting for the pullback. The minute I get some kind of pause in the pullback momentum, which was in and around this area over here where we are finding a neutral support, and then obviously confirmation that we are seeing some kind of bullish pressure over there. Now, I definitely drop down to the M15 to see structure even clearer, right? So we had the pop there, pull back, and I'm looking at that, because this one, I'd say it broke structure, but like I said, it comes with experience and you'll be able to make those judgments. And you would learn from them. So you would learn that, okay, if we maybe still within a weak area, maybe that is not a break of structure based on what you find and so forth. But in terms of this, we had a break of momentum nicely. If this candle can hold above, or if we can push slightly higher and then come down, I'd be super comfortable to take a trade on the higher low over there for the continuation to the upside. Okay, that is where we are right now based on US 30. Yeah, see price is making higher lows, and we can expect to have a pop to the upside, at least to reach our impulse resistance. Okay. Guys, that is it for the blueprint. I hope you guys understood this. I hope it makes sense. Follow it from the beginning. Know your overall time frame. Number two, just draw out those impulse legs based on the current structure. And then obviously draw your support and resistance lines for that impulse, just to have you know where you are in structure. Identify which phase you are in. Push or pull back. You will know what to do in which phase, right? Next, once you clearly know that you are in the pullback phase, you're on the lower time frames, waiting for the break of structure, waiting for, you know, bullish engulfing, whatever the case may be, and then you just execute. And by execute, I mean either you can make a immediate market execution or a pending order, whatever the case may be. Know where your stops go. Try not to keep it too tight. So if you are on, let's say, the 15-minute, and you had a 15-minute break of structure, and you are, let's say this is a buy scenario, a bullish scenario, and let me just do this on the chart quickly. So let's say you are in a bullish scenario, and this is where you are at. So on M15, you have obviously lower highs, lower lows being formed. Simply what you are waiting for is a break, a nice pullback, bullish engulfing on that one for the shoot. Okay. So this is where you want to see at the higher low point, showing you bullish pressure is in the market right now, and I need to be buying. Okay, that's how it works for my continuation on the overall move. Guys, I hope this helps. Please let me know if it does. Post it up in the group, post it on social media, tag me, whatever the case may be. I hope you guys enjoy this. I'll see you guys in the next video.